Stock Market Morning Prep video for Friday, October 31st. Happy Halloween to everyone. Quick admin note: if you don't see a video the next day, it's just because there's really no new change. Nothing really has developed, so don't want to keep putting out videos and sending emails out if really nothing significant has happened. But today is Friday, and I always like to do an end of the week video. Forgive me for the little bit of a scratchy voice. I'm a little bit still under the weather. Anyway, real quick, Dow Jones up 221 points, 1.3%. Not bad day yesterday, but it was a slow grind. If you were trading in front of the screens, you would realize that markets kind of gapped up around, I'd say somewhere around 11 o'clock or so, 10:30ish, and just grinded slowly higher. And then when we got into the end of the day, yet again, shorts covered and squeezed the market up higher. Nasdaq up 16. I'd say it was a little bit of a slower mover, a little bit more chop. S&P up 12. Russell not too bad. Russell actually had a little steeper incline to its move. And then last night, Japan injects more stimulus, and Nikkei actually closed up 4.83%. Big, huge move in the Nikkei. So as you know, around the world, central banks continue to pump liquidity into the market because they see something that's not pretty, and eventually, let's see if whatever they see comes out into the markets. But right now, markets are doing well. No more stimulus here in the States, but it seems like they don't care anymore. So that could be a good thing as well. Now we have the last day of the month. So we're going to see what happens here. Usually now we had a real big move, guys. I mean, you could see this here. This is the SMH, the Semiconductor Index. But I just want to show you, most of these sectors and indexes are the same. I mean, literally that V bomb that I mentioned on Wednesday. I mean, we've really rallied up. And pretty much a gap up and then a slow grind, a gap up, a slow grind, a gap up, a slow grind. Then we had these pauses in between. So really not a great day trading atmosphere right now, or environment, I should say. Excuse me. But still, there are trades to be had. You just got to keep looking pretty good. Now, if you're a swing trader, you're loving this move, obviously. So SMH looking okay here. We had a little bit of a pushback yesterday, but not too shabby. Still under the 50-day moving average. We have that 8 and 20 cross and well above that 200. Now the XLK, which is technology in itself, doing very well. And remember, technology really held up well this year. Better than all the other indices that we follow. So the XLK ETF, that technology sector, big volume yesterday, day before. So not bad at all. Let's take a look at the XLF. Now, see, so we have these sectors that we're looking at, some key sectors to really define what the markets are doing. Is it for real? And, it's hard to deny the fact that the markets are rallying this hard. And at these levels, no less. It will look like we're challenging the highs here again. And, we could take out 2014 in the ES and really start making new all-time highs yet again. And when that happens, you have the retail crowd continually trying to short the highs and just get squeezed. So that could really be in the cards. And if that happens, I wouldn't doubt I see 2100 in the ES by the end of the year. But again, I'd like to see that pullback and to accumulate some longs for swing trades now, not day trades, but for swing trades. We can get that higher low, maybe back to this, even into this area here, and that'll create that high low from here. That's really what you're looking for. Now that's the XLF. So banks and financials doing quite well, complementing the indexes that are moving. And that's nice. That's something that you want to keep an eye out. So if you have some market divergence in between some key sectors, then you have to look out and be careful. That doesn't mean you still can't buy the market, right? We want to stick to the trend. All right, so we took out that 78.6% retracement, and all is well now to really challenge the highs and the spiders. No question. I mean, this is really a crazy move here, and you can see these gaps. And when you see these gap up like that, I mean, you can see that that's strong, but intraday, when you're trading intraday, it's not so great because you're gapping up. And if you don't fill the gap, then you just kind of grind higher. But yet again, Spider's doing well. Not bad at all. And let's take a look at the 30-minute. Remember when we said here we had 3-day consolidation. Watch for a move. The markets want to vacate the area. Well, we got it, and that's for sure. Great looking chart, guys. if you use the Bollinger Bands with the 30-minute, it's a really fantastic little tool to see where the key points of energy is in the market. And you could see, and then with these volume zones here, you could see that little thin zone. And sure enough, when we squeezed in here the Bollinger Bands and we broke out of that, that's basically a vacuum. It just sucks price right back up to the resistance area, and then consolidates again. You could see we consolidated here, and look what happened. Boom, we gapped out again, and we have this thin zone in the volume, these volume zones, and look what happens, and we rally up again. So really nice little chart. If you want all of the info wanted, you can send me an email and I'll send it back. I'll send you all the criteria of the chart here, but not a bad looking chart here. I like using this on an intraday basis as well. Diamonds, okay, Dow Jones, beautiful, big move, but again, slow grind higher in the diamonds. But it's okay, we'll take it. If you're a swing trader, you're doing quite well here in this move higher. But remember, as you're doing well here, when you're swing trading, you could be getting hurt down here. So it depends on your risk profile, how much risk and how much pain you're willing to take when you're swing trading. But diamond's looking okay, not bad at all. IWM. Now this is something that really was really the canary in the coal mine, if you will. And on top of that, this is really the worst index as far as performance of 2014. Now it's starting to take shape again. So, I have to say that I have no bias at all to the marketplace. But when you see the Russell now catching up, playing catch up, and moving higher on volume, better than expected volume, you got to take note of that. You have to say, well, you know what, the IWM, which is one of our leaders, doing quite well. It looks maybe it's time for to start looking for some longs on the next pullback, and that's what I'll be doing. But I'm going to monitor next pullback when we do get it closely and see volume, see how price reacts to the pullback, and where it stops. Okay, that's really the criteria is what you want to look for. And lastly is the Qs. Technology doing really well. Below average volume, and now we're starting to get to these overbought levels again. And obviously, look what's happening here. We're challenging the highs literally within a few pennies. So let's keep an eye on things, guys. Don't get complacent here in the market. Anything can happen at any given moment. Remember, the markets are made to fool the masses. Enjoy the Halloween, family, kids, and we'll have a big update on Monday. Have a great day, everybody.